We feel like this is a very bullish outlook for the next 5 to 10 years of industrial, and so we thought it was a good time to pivot. And as you alluded to earlier, it's a very predictable asset class that, once you kind of understand the key factors of it, it's actually a little bit, I would say, almost easier to work with than other asset classes because of the triple nets and the things that you alluded to.
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth, one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
All right, welcome everyone to another episode of Spur Equity's Spur Your Wealth podcast. I'm your host today, Param Singh from Spur Equity. So as you know, on the Spur Your Wealth podcast, we aim to bring successful investors and experts on our podcast to share their story and secrets in investing, and so we can all stand to benefit from their experience. And today, we're fortunate enough, we are doing something different today, folks. We have the whole team from Keystone Private Capital here with us today. So we have John, Angel, and Brittany with us today. So really, really excited about this, having the whole team here. So Keystone Private Capital, this is a private equity firm that the three of these leaders kind of run, and their focus is industrial assets. So we've had a lot of discussions and interest in industrial. So we thought bringing on Keystone Private Capital and kind of diving in deep into that particular asset class would be good. So really excited for the conversation today. John, Angel, Brittany, thank you so much for being here. Really looking forward to the discussion.
Thank you for having us.
Yeah, thanks for having us for sure.
Great. So as we kick it off, obviously we want to get to know a little bit more about you guys. So I don't know, Angel, if you want to kick it off, and Angel, Brittany, and then John, if you want to just give a brief intro to yourself and how you got started, and then, talk to us a little bit about Keystone Capital.
Yeah, so again, thank you again for having us. I'm Angel Gonzalez with one of the partners here. For myself, it's actually kind of unique because sometimes when you think about partnerships and what skill sets people bring to the table, this group right here and our partners, we do have very complementary things. I come actually from a background of finance and executive management, really focused a lot on just basically problem solving, really just trying to enhance, not only the bottom line, but it's really about enhancing every part of the metrics that really was kind of deciding if we're really winning or losing and things like that. And so as I was kind of going through my journey in my last role, the thing that kind of came about for me is no matter how much I was making from a big salary, things like that, I realized that I had nothing that I could either leave for my kids, or it was something that if for some reason COVID taught us anything could happen at a moment's notice, and I didn't really have a great backup plan. And so for myself, it was kind of those realizations that with the aid of my family, especially my wife, Brittany, actually, I was able to actually really kind of realign myself and kind of decide, okay, what are the next things that we're going to get into? I actually partnered up with a different firm before, really had an opportunity to understand the business a lot better. We were more focused at that time on the office sector versus the industrial sector. But we saw that there were headwinds coming, right? We started that there were things in the market that was kind of letting us know that there's a better path. And from a passion standpoint, it was something where I'm like, hey, not only do I want to have an asset, can I make it be meaningful? And can it actually have an impact when it comes to some supply chain constraints or these other things? And so that's kind of what made me shift over. And that was kind of a little bit about my background.
Great. Thank you, Angel. Brittany?
It's going to be the one time that I have a wonderful little daughter with me that's going to want to cry the time that I get to talk. So bear with me if you have an interruption.
You got a junior partner with you today. That's right.
I do. I would say, yes, I'm Brittany Gonzalez. Thank you very much for having us on your podcast today. It's really exciting to be able to be on the other side. I have a different avenue, a little similar to Angel, but I came from a financial background, so I'm still in the financial side of things. I worked in the, large corporations when it came to the financial banks. And then I transitioned over to be a partner within this organization with Angel and then with June. just to continue to expand. And what I focus on more is on the operation side as well as the client experience. So ensuring that everybody has a good experience when they come and join, and they want to be part of our fund or just want to join and be a partner with one of our investment properties.
Great. Thank you. John?
Yeah, thank you. I came to the partnership with slightly different backgrounds. I formerly trained as an accountant, as a CPA. And so, in my former career, a lot of my time was spent in a variety of different backgrounds working in accounting. So I did everything from, auditing early in my career, spent some time doing tax work along the way, and then did corporate accounting as well. But my interest in real estate really kind of came along while I was working in taxation. And, one of the observations I made is that so many of the folks that I would work on their tax returns, and I, kind of had privy insight into their information. The people that I saw doing really well were typically really involved with real estate. And so that always kind of piqued my interest. And, I've always kind of been interested in investing on the periphery as well. And so that's what really kind of got me into real estate in the first place. And then found Keystone here and really just enjoy work with my partners. And it's been a great ride so far. But my background kind of leads itself to working in the underwriting and the back end of the business as well. So kind of risk management.
Excellent. So that's great. I mean, I like what you've put together, right? I mean, I think like you mentioned, very, very complementary skills. You talk about, underwriting, risk analysis, and acquisitions versus operations and investor relations, and so that naturally, did that come about naturally? I mean, I guess you guys have, sort of these skills in the background from your previous world and brought that to the table and saw that, this fits really well within your private equity business. I guess that sort of naturally happened from that perspective. It sounds like.
Yeah, I would tell you that I'm actually, sometimes I tell these guys, I don't know how blessed I feel sometimes and how it all happened, because it was that organic for us. It was kind of situations where when you meet good people, and then for myself, I knew that I had a prior history in single family and renting those out, and I built a nice little portfolio of that once upon a time. But then it was as we transitioned and I talked to Brittany, it was kind of one of those things that we both kind of came together and were like, there's a better path forward. And then as we were kind of going through, we had a prior partnership in a different firm that we were part of, and we just felt like the alignment wasn't exactly what was the right fit for us. And then once we had an opportunity to really get with John, it was like, oh my goodness, everything where I'm weak at, he's better at. Anything that she's better at. Like, it was kind of, and it just kind of came together. And that was kind of my takeaway, where I was just like, that was way too seamless. And it's been quite an awesome ride when you find the right partners.
Yeah. No, I think, go ahead.
No, I was just going to say we all complement one another, which is pretty exciting that each one has different strengths and they all just add on to one another.
Yeah, that's I think, we went through the same thing. Sorry, Jen, go ahead. So Rav and I, we went through the same thing. I think we also, we have values aligned, right? So that's one thing that we want to make sure that, like anybody that we partner with, our values are at least aligned. But yes, for when it comes to skill set and expertise, we want to make sure that we bring different things to the table, because otherwise, we're preaching to the choir. The other thing is marrying skills. One thing that I have a hard time originally had a hard time figuring out is that I don't have to be an expert at every aspect of my business. Like I don't, right? Like originally I had that kind of mindset that like I need to know every single piece of my business and I need to be an expert at it. So I need to spend all this time doing every little piece of my business. And that's, we finally got away from that because there's no possible way, right, to be an expert in every part of your business. And the other thing that I learned from a guy I actually talked to today, put it really nicely, he's like, if you're working in the business, you're not working on the business, right? So like if you're in the middle of the weeds of every little thing of your business and you're not leveraging other people's expertise, then you're not going to grow, because your growth is tied to that. And so I love that. Like, working on the business is what, us as leaders of the business have to look at, versus working in the business, finding people, finding good resources, finding good partners to kind of marry those skills so that we're all, running on all cylinders essentially. Right. And so that's really key. And I think that, what advice would you give somebody who's like, thinking to either start a business or, get active in real estate, but they feel like they're alone. They're like, hey, I'm the only one here. How would you give them some advice on, okay, how to scale that, how to find people that, to partner with, hone and understand what your skill set is versus what skill sets you need to bring to the table from a partnership perspective?
Yeah, I could jump in on this one. I think, one thing that kind of stands out to me is just kind of assessing your strengths and weaknesses as an individual and really understanding where your skill set lies, and some of the things that kind of stood out to me along the way in this journey is we kind of talked a bit about personality tests and where, one of us might be a strong D and the other might be a strong S, but those two things can really work well together. It's just learning how to work well together. But I guess from my standpoint, it's like, there's certain things with this business that really wouldn't have come naturally to me, but my partners gravitate towards those things. And that to me kind of makes the whole thing, the collective, work better.
The one thing I would add is just really making sure that you're being vulnerable with one another, not being afraid to share your true colors, and always making sure that you're continuing to put your best foot forward, just because you have partners for a reason. And we're all here to help and support one another. And I think that's definitely something that's key. So if you feel like you need to know everything of every single piece, you're going to do more damage than letting one of your partners take ownership and continue to focus on that. So leverage the strengths of the people you work with and be okay to take a step back and let them thrive in that arena.
Yeah.
Yeah, I guess I'll actually throw one or more out there, and that's think that you have to understand what your values are. I really do, because if you don't understand the values that are in your non-negotiables, then you're not going to be able to basically hold the other person or hold yourself accountable within the partnership experience. And that's one of the things that I will tell you about being partners with the partners I have is every time I think about how we think about our families, how we think about doing business, how we think about investing, all these things are in alignment. And that to me is what makes it more fruitful, is because you really have to understand what is your barometer and how that's going to ultimately make you guys work in a cohesive manner as you keep moving around in the journey.
Yeah, I love that. I think one of the things that we do quite regularly is, I think to Brittany's point, like, making sure that roles and responsibilities are clearly laid out. Anytime we bring a new resource in, or like even between, us as partners, is leveraging the skill set, but also making it clear where those roles and responsibilities lie so that you can rely on each other and have trust in one another in the area of those roles and responsibilities. I mean, there's the only thing, a lot of things that we come together on, like Rav and I will come together on, is stuff on strategy and vision, right? Like, anything that impacts strategy and vision and sort of, forward looking stuff, that's where we have to put our heads together. But everything else, from an operations standpoint, investor relations standpoint, we have our own kind of roles and responsibilities that, again, we just, have that trust factor that, hey, these things are going to get done. And the other thing that I've heard time and time again from billion dollar, kind of CEOs and operational folks, is that when you're training resources, like when new folks are coming on to in your business, like when we hire somebody or whatever, he's like, it's really important. I love this. He's like, they say that it's really, really important to train on the why you're doing whatever you're doing. So think about, like, from an investor relations standpoint, right? Why are we doing what we're doing? What value is attached to communicating and being transparent and bringing, honesty and trust and value to the investors, right? To your investor team. If you train on the why, the what and the how naturally follow. You don't really need to train on that. Everything kind of fits in place, because if somebody is bought into the why, then all of the other things kind of, fall in place. What we get stuck in, I think sometimes, is like training on the how and training on the what. And so going through the mechanics of, well, here's how we send out an investor update, and here's how we communicate, here's why we do this, here's all the tools. But if the why is not understood, it just feels like it's just a task. But if they're bought into the why, then they understand the mission of the organization. And I think, we as leaders, I think we have to also remind ourselves of that why, why we're doing what we're doing. I'll give you an example, because sometimes we lose sight of that too. I'll give you an example. So just like you, Angel, described, like, why did we start, Spur Equity? Just exactly what you said. It was more from a selfish perspective, right? To say like, hey, I need to provide a legacy and something, for my family that's long term. Because I was in the same boat that, my W-2 job was, it was paying for our lifestyle, but what that meant was I have to continue to work indefinitely to continue to have that lifestyle, and that just it's not sustainable. So building something that allows us to maintain that lifestyle and scale down this kind of workhorse mentality, having money work for us and leaving that legacy. So we do that. Now, starting off, we know that we're going to make a lot of sacrifices, meaning that I'm going to spend way more time, because I did it in parallel with my W-2 job. I'm going to spend way more time on building this business, and that's going to take time away from my family, more time away from my family to do that. But, having that line of sight to say, look, I'm giving myself a 5-year window, and within that 5-year window, I'm going to move fully into real estate. I'm going to quit my W-2, and that'll give me time back to my family. But then if we're spending 40, 50, 60, 70 hours a week on the real estate business, then we didn't really align ourselves to the why. So that's something that we have to constantly do, is say, hey, are we still aligned to, what our goal was, when we started this journey? And goals can change, they can evolve, but you have to take stock in that and make sure that is kind of in the forefront of every, step and decision that you're taking, I think. Let's talk about your particular area of focus. So we like industrial, right? So we just did an industrial fund this year because, of what was happening in sort of the multifamily transactions this year was a little bit unprecedented. And so our investors, we listened to our investors, and they wanted something different. They wanted, to diversify asset classes. And so they wanted their, lower risk profile. So we jumped into industrial because of that reason, and because of the resurgence that we saw, after the pandemic. Talk to me about when you made that decision in looking at industrial, and what kind of projects you've done and are doing and are looking to do, kind of this year, next year. Are you still kind of bullish on industrial? Talk to me a little bit about kind of what your business plan is on that front.
Yeah, I can lean in here. So, similar to you guys, we kind of made a pivot early this year. It's actually a pivotal moment for Angel and I at a conference, and just kind of sizing up the landscape of the industry right now, and just kind of understanding that office in particular was, in a very rough place, and, kind of looking at industrial as an asset class. We had seen the tailwinds were there over the last, 5 to 10 years, like you said, particularly with the Amazon effect that's been kind of going on with distribution centers in particular. And so, looking a little bit deeper into that, we became even more bullish going forward as well, the next decade. And the reasons are, the pandemic kind of highlighted a very keen issue for our country, which was basically securitizing and making sure that our supply chains were intact, and that was a very big issue, and it was a very big pain point for a lot of Americans. And we realized, from our dealings with other business owners, particularly folks that are involved with manufacturing, that there was going to be a shift to get a lot of this manufacturing back to domestic shores. And, we've delved into the statistics on the reshoring and onshoring of these manufacturing firms, and we realized that it's a real trend that's happening. It's bared out in the statistics. And we know that these shifts are going to create momentum in the domestic landscape for industrial real estate, primarily with manufacturing facilities, but more distribution facilities as well. We've also noticed a shift in firms that are looking to decentralize their distribution centers. And so instead of having one distribution center, they want to basically create some redundancy in their supply chain, and they're wanting more distribution centers. So we feel like this is a very bullish outlook for the next 5 to 10 years of industrial, and so we thought it was a good time to pivot. And as you alluded to earlier, it's a very predictable asset class that, once you kind of understand the key factors of it, it's actually a little bit, I would say, almost easier to work with than other asset classes because of the triple nets and the things that you alluded to.
Yeah, and to Jun's point, I think for us too, one of the things that was kind of nice is that we kind of think of industrial as It's multifamily and industrial is kind of how we look at it, because industrial encompasses a lot. We got car wash projects that we're on. We have different type of warehouse and storage, and we got yards that we're like. So we kind of had that opportunity where we're like, hey, we can be really a good diversification as well for our partners. Because we do have a lot of partners that are in the multifamily space. And because we really were never in that space, we were able to kind of lend a different perspective. And so that also is one of the things that was kind of unique to this year, where we started having other people that were in different spaces and saying, hey, we might want to diversify our portfolio into what you guys are doing. And so that's kind of allowed us to really be broad with some of the projects that we're on. And quite frankly, it's been really nice having the team here that's really been kind of focusing on identifying areas throughout the country that have really important arteries or have really important traffic zones that really will have an impact into what we're kind of trying to solve for. So it's really unique how we've been able to kind of come at it from a lot of different angles.
So talk to me a little bit about like typical returns and also like hold periods, because when you get into these industrial properties, I'm assuming they're long-term leases, right? We're talking about folks that are going to be in there for long-term. So that's a nice thing to jump into. But talk to me about like what your business strategy is on hold periods and what kind of returns we're looking at over those hold durations, and then what's our exit strategy? What was your exit strategy? Are you selling these as a portfolio? Are you selling them to institutions? Like what's that kind of look like from your perspective?
Yeah, I'll chime in with the first part of this, and I'll let Angel go from there. But some of the things that we see in the industrial space is that because these tenants are typically triple net and they are typically very long tenure tenants, we see very predictable cash flows from our properties, which is a very nice feature. Typically I'd say at the low end, you're looking at a 6% cash on cash return, somewhere up to the 8 to 9% on some of the better performing properties. Typical hold period for us is going to be somewhere in that 5 to 7 year range.
Okay.
So we are looking at other projects where we will dispose of those, quickly. We'll turn those over a little bit more quickly and look for the appreciation if it's there. But I would say typically it's a little bit more long duration than the other asset classes we were involved with earlier.
Yeah, and you had asked about kind of like, so not only are we want to make sure that we are hitting those marks like Jim was talking about, is also the fact that we also understand that the landscape of these leases. So like, for example, one of the buildings that we're looking at, that is, you're looking at, okay, now you're having 5-10 year leases. You're having no responsibilities primarily outside of just making sure that the building's there, right? And everything's kind of there together. But for us, what we're thinking of, what we are really looking to do long term is that we are looking to sell this as a portfolio. That is kind of the idea for us. We do believe that we have a really good target plan. Now, for us, it is definitely something where we have basically a strategy of also when new funds will be coming online. So then that way, basically, as we are basically sunsetting one fund, we're really kind of in the middle of another as we're getting ready to start another. So we really believe that there is kind of a cycle that we can really take full advantage of. Especially because of the fact that we are looking at these longer terms and longer relationships, which is actually also one of the things that I think is one of my favorite parts about the industrial is you're kind of in that fight with your tenants for a while. So you really kind of come together and can really be kind of like another team member, essentially, which is really awesome.
That's great. Yeah, no, I think we've found. We've only done one industrial fund project on ourselves, but we are seeing that exactly what you guys are saying, like very, very predictable cash flow. And we're we've purchased these as sale leasebacks. So we know going in, we're purchasing it. There's already a lease from, the company or the corporation that we're buying these real estate from. There's already a, 10, 15, 20 year lease that's coming with that purchase. So very, very predictable, and then modest, kind of increments, annually from a rent perspective. So very predictable cash flow and income. And then the best part about it, I think, is like, operations. We don't care about operations, right? So absolute triple net. So like the things that have hit the multifamily space in the last, year or 2 years, is on operations. It's inflationary pressures on expenses, on utilities. It's inflationary pressure on insurance and property tax, and obviously the adjustable rate mortgage piece of it, right? Like we've literally been hit with a trifecta of pressure that's hitting the bottom line, from that perspective. And so industrial, especially the absolute triple net scenarios, one, we have occupancy is not going to be a hit because we got a 15, 20-year lease. Okay, great. Income, rents are going up 2-3% every year. Great. That's going to be that's already built into the lease. We don't have to find another tenant. And then all the inflationary pressures that we have on taxes, insurance, and utilities, expenses, they're all borne by the tenant themselves. So, really taking the risk out of the model. That's really why I loved industrial. Obviously, the returns are slightly different, but lower risk, lower return. But you can't go wrong with going that route, because especially with all the hits that some of the other sectors have had, industrial seemed to be. And don't get me wrong, I'm still bullish on multifamily. I think people still need a roof over their head, right, wherever we're going.
Oh, yeah.
But industrial is like a nice way to balance out the portfolio, right? And so we're hopefully gonna see more of that. So let's talk about, just to close this out. What markets, geographic markets and submarkets have you seen be really good for this type of model? Are there specific markets that you guys focus on, or you're kind of all over?
Our primary focus has been kind of our own backyard to start. So we focused along the I-35 corridor here in Colorado, going up north and south, coming from Mexico. That being the supply chain we were kind of focusing on. But as we grow, we're focusing a little bit more along the border, going east to west. And we're going to branch out.
Okay.
Primarily we're looking at Texas and Arizona for opportunities there, maybe some opportunities in New Mexico as well. But really just looking at opportunities that are immediately across the border to kind of capture some of this reshoring, onshoring traffic that we're talking about. We expect to be very bullish for those areas.
And just from an acquisition standpoint, you're looking to purchase existing product, right? Existing real estate. Are you looking to do development if there's a need, or is that not part of your current strategy?
The current strategy really is to focus on current assets that are already existing, and we are looking at some land plays as well, which are very intriguing to us. But we would look at development. I think that's something we're going to pursue in the future. We've definitely talked about that, but our focus right now has been on purchasing current assets.
Excellent, great, thank you. So I'm going to shift focus a little bit. So we talk about the why. One of those whys is obviously providing a legacy and building generational wealth for our families. But the other part about it is providing for our communities, right? And so I know that, Brittany, you are deeply kind of involved in your community. And so tell me a little bit about how Keystone works with nonprofits, and obviously one of the reasons that we build generational wealth is to have more, but the whole part of having more is that we can also give more, right, and make a bigger impact in our world and bigger impact in our communities. So can you talk a little bit about how you've positioned Keystone and what you're doing and to make an impact on the local communities where you're involved?
Yeah, absolutely. I think a few things that we've been definitely trying to do is make sure that we can continue to immerse ourselves in our own backyard. So we are connecting with a couple of the local colleges just to see how we can help and support them. And I do apologize, but I have to
It's life. It's all good.
It's family. This is what we got.
Exactly.
And I would say we definitely also partner with a couple other organizations. We have Charity Waters, which is an organization that gives back clean water to individuals. And so we really want to be able to make sure that we have not only a need locally, but also nationally. And so we really are continuing to focus on that. And if we do receive any profits, we do go ahead and give that back. And I would say each one of us probably have individual programs and charities that we're passionate about, as well as organizations that we all do collectively, from helping people that are veterans, people that are in need in water, just local kids that are continuing to learn and grow and being mentors. So we have a variety of it. And as part of us, it's one of our motto, right? So we're faith, family, and giving. And giving is not only important to us as individuals, but it's definitely something we want to make sure that our investors know it's important to us as a firm and an organization.
That's wonderful. That's beautiful. I mean, we talk about that ourselves, right? Like I said, giving is a big part of why we're doing what we're doing, because we can, right? We can make a bigger impact. The more you get, the more you give, and even reverse that, the more you give, the more you get, right? Like I found that as well, right? Like I talk about this all the time, that like my family or my parents came here to the U.S. And he came here with really nothing in his pocket. And growing up, we didn't really have much, right? But my parents always taught me that it doesn't matter how much you have, you always have enough to give. You always have enough to give. And so, we lead with that mindset, a lot of people say, like, we're talking about wealth and we're talking about money and how to make more. And in most faiths and, communities, they say like money's not everything. You're absolutely right. But I feel like I love this quote. They're like, money is like oxygen, that the more you have, the easier it is to breathe. And I think, that goes a long way. Like at least having enough to sustain yourself and your families. And then again, having enough to actually make an impact, right? In your backyard, in the communities that have nurtured you and helped you grow, and being able to give back is just a huge thing for us as well. So I'm really, we're really passionate about that. I'm glad to hear you guys are passionate about it. That's one of the reasons I wanted you guys on our podcast to talk about that. Cause even like you said, from an investor standpoint, investors and partners need to know, where our values are aligned, and those things are really important to us. And, we want to partner with folks that have that same mindset, right? Of giving back and not squeezing every last profit out of something, right? The other thing is, like, we work in the multifamily space. So that's another area where I feel like we can be very, very influential in the living standards of the folks that live in our properties, right, in our communities, and being able to renovate those, being able to make them better, make them more family, oriented, and so, giving back to those residents as well, because at the end of the day, they're the ones that are fueling this business, and so being able to do that and doing right by them, that feels good to me, right? Being in this industry, it allows us to do a lot more just in business. And if you take care of your partners, you take care of your people, your community, money's always going to come, right? I think that if you lead with that mindset, and so that's kind of what we kind of lead with as well. This has been a really, really enjoyable conversation. But as we wrap up the conversation, what I want to give you guys is a chance to give some final words of wisdom, final thoughts, lessons, talk about 2023, 2024, future, what you're doing. But any final thoughts, that you want to give to our listeners? I'll start with John first. John?
Sure. Well, first of all, just thank you for having us. We're very appreciative of the opportunity. But, I guess for us, the main thing is, we're kind of approaching the next year or so very patiently, as probably most people in the space are. We're looking, very optimistically at the landscape beyond that. And so for our firm, we're just very cautious and aware of the macroeconomic environment that we're in. And, I'd say as we get through that, we're looking to be very active beyond there. So probably in 2025 is our goal.
Excellent. Brittany?
I'm going to give feedback on a different avenue, and that is if you're hesitant on taking the step or taking the leap to invest, get off the sidelines and invest. And the reason I say that is find people that you have, that you know, that you trust, that you can connect with. So if it's for equity, if it's somebody that you have, who it is, definitely connect with them, because they can definitely help you, they can guide you, and you aren't stuck in just one avenue. So I think one big thing that a lot of people get challenged in, and you mentioned it earlier within W-2s, is that that's their only income stream. Yeah. And definitely be able to look for additional income streams. So don't just think of one, think of multiple, and definitely reach for the stars. Don't hold yourself back. And if you think and you believe it, go for it. So that would just be another tip that I would share.
Excellent. Love that. Angel?
Yeah, I think that one of the things that you said just now, I was thinking about like 2023, 2024. Jen is thinking about 25. I would say embrace the future, right? Because here's what's happening for us. We, as a firm, became very bullish also on AI. And so now we have for our firm, we have now, not only have we now said, hey, let's really plan on how we can do some seriously good acquisitions in the future, but now how can we embed AI into everything we do, from the function of helping us with analytics, with embedding it with our marketing strategies, with embedding it with how we do our client relations, like all the things that we're doing, at least in our firm, we are really pushing that because we believe that embracing the future, embracing what's coming, because a lot of people, in my opinion, I know I've actually was just at a talk recently, and I was talking about AI and all these different things, and people are like, it's gonna like run the world. I said, actually, it will be two types of camps, right? Either you're gonna run AI or AI is gonna run you, one or the other, right? But at the end of the day, if you really just embrace all the tools, all the things that are coming, and really take on that tailwind effect, and really kind of immerse yourself, I think you're going to see a lot of great outcomes for those that do that.
That's great. And I'll kind of marry what you and Brittany said. We live at a time where there's so much information and so much content out there where we can absorb and learn from, and including AI, right? And so I think about like years and years and years ago where people had to kind of navigate things themselves. And now you can quickly just jump on a YouTube or a podcast or something else and like just immerse yourself in the content, right? Whether you're talking about multifamily or single family homes, short-term rentals, Airbnb, whatever it is, right? You can actually jump in and start to learn. And the other thing that I really love, and again, we're passionate about education, is that we find in our industry, people are more than willing to share, right? Because there's this idea of abundance, right? That when there's plenty of, that's the biggest problem in real estate, is there's so many different ways to make money and invest that you really have to find, what you're passionate about and what your niche is. But there's so much content out there, so much information out there where you can find it, you can do it. I mean, think about AI. Like, you don't even have to watch an hour-long YouTube anymore. You can ask AI to summarize the YouTube, right? and then read the summary. Like, you don't even have to watch the whole hour. But in any case, like, I completely agree with you guys that one, education is huge, right? Like look at and learn, what those avenues are. Because yes, you do not want to be in a situation where W-2 is the only source of income. And we all seen, that, hey, 401k and your retirement plan is not going to just cut it, right? To continue to keep your lifestyle. So you have to do something else that's going to get the money to work for you. And, that's the biggest thing that I can, teach my kids or teach the community around me, is that, hey, we have to learn and find ways to get our money to work for us. So yeah, I completely echo that. But yeah, knowledge is great, educate yourself, but we also say, like, you got to jump in. So Brittany, you're right on the money, right? Like, you have to take that leap at some point. So don't just sit on the sidelines and continue to watch other people make the journey. You got to be part of that journey yourself. So take action and take your leap of faith. So absolutely, I love it. So as we wrap up, so if folks want to get in touch with you, Angel, Brittany, and John, what's the best way to get in touch with you and find out more about where Keystone Private Capital is going?
Yeah, so I would say if you really want to find out a lot about what we got going on, I'll say go on KeystonePrivateCapital.com. We also have the Keystone Advantage, which is our course and also our tool that we use with the AI, so that we can help launch other entrepreneurs and people are getting in the space. And then we also are on LinkedIn, and our YouTube channel, and on Facebook. So there's kind of every way you can find us. But I would say just look us up. We're easily accessible.
Excellent. Well, great, guys. I really want to thank you for joining us today and taking the time to share your story and to share these words of wisdom with our listeners. I really appreciate it. It's been a really great conversation. We can keep going, I'm sure, but we'll have you guys on again certainly in the future, just to kind of see how things are going and what kind of projects you got lined up. So, but again, really thank you for sharing your time with us
No,
today.
we appreciate it, Paul.
Thank you, Paul.
Great. And for our listeners, thank you for tuning in to another episode of the Spur Your Wealth podcast. Again, I'm your host, Budham Singh with Spur Equity. Remember that your journey to financial freedom begins with both knowledge and action, where knowledge is power, but action is a superpower. So until next time, happy investing.
Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at SpurEquity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@SpurEquity.com. Until next time, happy investing.